Peace, guys. It's Gabe, owner of the VVS Investment Trading Group. And today, for the group, I've got a market recap on the way. Wild day all over the place in the form of Trump speaking this morning pre-market, and then the market just running wild to start the day, and then us dropping and giving up all of the gains. Then only to have this insane rally at the end of the day on that Greenland news. You know, a wild day. I call this the pinball market. There's been plenty of days where just knowing that Trump is in office, it's led to some pretty volatile trading conditions out there. So I want to deliver this message from the perspective of somebody that's looking at the big picture and not somebody that's looking at this pinball market intraday. That's the last thing I want to do, is look at this pinball market intraday. You know, I'm more focused on the big picture, guys, and I urge everybody to do the same if you're going to trade the style of trading that I've been successful with and capitalize on swing trades. And again, swing trades is simply catching moves from a day to potentially 2 or 3 weeks out. Okay, so the market recap today was wild all over the place. We had that Greenland acquisition news. Did we acquire Greenland? No. Are we still in the works? You know, putting together a plan to acquire Greenland? Yes, that's what we're looking at. But we don't have Greenland. So what's happening is you're seeing uncertainty in the market. Will the United States get Greenland within Donald Trump's presidency, or will we not? Nobody knows yet. Okay, it's not written in stone. So money's flocking to commodities. US dollars rising. Gold, silver, they're at all-time highs. And we're going to get into the gold and the silver trades a little bit. It's something I haven't got into much here on the channel, but now the charts are absolutely screaming for attention, and we've got to pay it the attention that it deserves at this point. So gold, silver, all-time high. Do we short here? Do we not short here? Let me tell you what my plan is. Stick around for just a minute. But guys, today's message is no different than the messages in our last watch list. Focus on the charts. Don't get caught in the hype, okay? It's so easy to hear these headlines come out. And if you're watching the news, you're automatically going to get caught up in the hype, because that's what the news is designed to do to you. It wants to keep your attention, and it's going to do it by tugging at your heartstrings and throwing these emotional headlines out to you, okay? It's never that big of a deal. It's never that big of a deal. And my opinion is, if it's really that big of a deal, it's going to make its way to me without me looking for it, right? If, like COVID was such a big deal, it came to me very quick without me going out and searching for it. So I can avoid the hype. I can avoid the emotions and the turmoil that these news channels try to throw at us simply by staying off of them. So focus on the charts. We're technical traders, and everything is priced into the charts. So focus on the charts, focus on SPY, focus on QQQ. That's where the big money is. And last but certainly not least, guys, if you hear nothing out of this message, hear this, please. Predefine your risk on every trade you take. Where is your stop, okay? When we get into these charts, we're always talking about the risk, the area where if we lose this area, the chart loses structure and we no longer have interest in the trade. So let's get into the watch list without further ado. I've got some plays that are really shaping up nicely, and you're going to want to stick around to see what we've got here on tab. So starting with SPY, we tested that 50 EMA today on SPY, and we got a strong hold. After it looked like the sky was falling yesterday and we had that gap down and that sell-off all day, we gapped up today and we held the 50 EMA. Okay, we held the 50 EMA with a great volume day, a strong volume injection. Were we able to clear and completely close the gap from last week's trading? No, not quite. But a healthy rebound, a solid start to a V-shaped recovery to, give us some fuel to push up into these all-time highs. But am I saying we go to all-time highs right now? No, not at all. That's not what I'm saying. Let's see if we can get a little bit of grind and then maybe some more, pull back here in the intermediate term. But all I'm saying is that's a pretty healthy bounce from SPY. And it should be noted that the 50 EMA has held just like it's held going back years on this rally. At the beginning of last year, we had that big washout on the fear of the tariffs and everything. And we washed out in April last year, and a lot of people thought the sky was falling. We've bounced back super hard, and ever since then, we've just trended above the 50 EMA. Every time we've dropped down, we've been constructive, and we've worked our way back up, okay? Now, the 50 EMA is sort of flattening here. It's kind of tapering off a little bit, you could say. And, guys, that's perfectly healthy. It's constructive for the possibility of a continued bull run to the upside, okay? So nothing to trip out about. I love today's candle, the volume that injected in today's candle. QQQ, when we break the tech sector down here, you start with the 50 EMA in a little different position here on tech. The 50 EMA we tested today, we denied, and we're still trading slightly beneath it on today's trading session. So nothing's changed within the last month or two. Tech is still lagging. It's the lagging sector. And, it's no surprise seeing a lot of money rotating into some safety names, some inflation-proof names, you could say, some recession-proof names that'll be around for years to come. Tech lags just a little bit, but again, nothing to be super tripped out about. Moving on to what we've got here with silver, and silver and gold. What's the silver and gold trade look like? Well, guys, I've got to tell you that these charts are extremely extended, okay? What a massive run in the commodity sector just since November. I mean, we're talking about shares in silver. When December started, right? We're not even talking about 2 months ago. When December started last year, shares of silver were trading at $45 a share. Now they're trading at $84 a share. Okay? We're talking about almost a 100% increase in something like silver. Okay? Now, do we short it here? The quick answer is no, I'm not ready to short it yet, okay? There's two ways to look for a short position on charts like these, and this is something that my mentor I've watched him make, thousands of % on option trades by using this strategy right here. And it's called the blow-off short strategy, and it requires 2 steps to really look for confirmation to size into a short. The first is extension from the 50-day moving average, which you can see here in the past on this name. We've been, extended. And when I say extended, it means draw a line from the close of the candle down to the moving average. And here you can see we were trading at $50 and the moving average was around 38. So 12 points extended from the 50 EMA. Not quite 13%, but roughly in that neighborhood, okay? 13, 15%. How about now? If we take that, and in here, I draw it here in intermediate on this run, and we retrace from the top of that candle, which was, let's say, 70 down to 50, okay? So we're 20 points extended from a $70 level. And, we're getting closer to that 30% extension at this point. Now let's measure and see where we are. From 84 down to 60. So we're 24 points extended on an $84 stock. So again, we're still in that 30%, 25% extension range. And just because we're there doesn't mean that we have to reject. Because what's happened in the past? We've been on that same extension and we followed through to the upside. So nothing screams the blow off short. That's the first way you can look to see if it's time to really short. The second way you can look is you can go down to one of these indicators that's really slept on, and it's called a Bollinger Band, okay? Here, let's see here. to do this. Here it is. Okay. So Bollinger Band, you want to apply that to your chart. And look at these Bollinger Bands. They basically just track extension, and they track, the strength of a move here. And you'll see that the Bollinger Band, whenever we get to where we're extended out of the Bollinger Bands, that's when the trend is sort of, it's operating in a different way than it has in the past. Every time we've hopped out of that Bollinger Band, you can see prices, for the most part, snap back into it. And here we are, we're still trading within that Bollinger Band, moving up within this trend. Am I saying it's healthy? Absolutely not. But I'm saying it's not skewed data from what we've seen back here in the past. So the Bollinger Band check doesn't really hit it for me. The extension from the 50 MA is not outlandish. It's not ridiculous, even though we're up 100% in 2 months, 3 months. What we need to see here is a couple more gaps up in succession. We need to see back-to-back days of large gaps, and give us some room here to the downside to fill these areas. We've got a price gap here, a price gap here, but really in this last little phase, we don't have any price gaps to work with. And the one that we had 2 nights ago has already been filled. So silver, the short trade, is definitely on my radar. It's not one that I am acting on currently. NBIS, okay? We've been all over this one for the better part of this month, and we've laid out a risk to reward situation here where we're targeting this $120 level, and we're looking to risk basically 90. There's been some times I've said 88. There's been some times I've said 92. It kind of depends on your risk tolerance and everything. But today, I thought this candle was very, very interesting today. How we tested the 50 MA, and we really held within this candle. That's been the strong candle to go off of. That kind of flipped the trend of a couple weeks back. So, really interesting today as far as where we tested and where we finished. And it's still constructive. Crazy thing for me today on NBIS, I really haven't been missing on this one this whole month, I'd say. Just been hitting on NBIS all month. It's made my month for sure. But today I bought NBIS at the low of day. I just bought it on that 50 MA test. What the heck? Let me get some skin in the game for a potential next couple weeks rally. And then boom, we got that news with Greenland, and I looked at my phone and we were already up like $4 from the low, maybe 5. So I took a little bit of profit already off that. But still, this is a constructive shape. I like the look here. The volume is starting to roll in. Let's see if we can get a volume day to the upside and test that 110 and hit this thing with some calls when we push through 110 to 120. So I like the look on NBIS, still constructive. Let's see if this thing can start to really get some volume pumping in here. It's a good look. A-Lab, another one I didn't trade. This one is a crazy mover. When you think about a stock that's $180 and it moves 6 to 7% almost every day, I mean, guys, that's incredible opportunity. Really, that's opportunity you don't even need to go in and take options on. You can play that with common shares and make a healthy return. So A-Lab still looking constructive here as we start to shape up into this 190 break. Over 190, over 200, those are your levels. We've got to pay attention to the way it reacts at the 190 and the 200. Because if we can get a day where we start the day with some momentum around those numbers, that's when I'll look to come in and capitalize on a trade on ALAB to the upside. I like the look. I like the 50 MA compression and the way we've really started to respect it and switch trends. ASTS, a big washout today. 120 down to 96. That's range right there. That's incredible range. Are we going to see something like that every day in the market? No, absolutely not. So what it did was it really fell right back into this ascending triangle look right here. Okay? And it really just constructed within itself even better. We've got a big volume candle. We've got a healthy watch out, a gap fill. And we've retested this previous breakout spot of $100. So, guys, that's an interesting look right there. That's one that if you're getting a little skin in the game on today's dip, I absolutely support that with risk under the $100 level. Maybe risk the low of yesterday's candle, or today's candle, that is. Maybe you risk $97 and you try to really position yourself into this as it shapes up. Because now our new line in the sand is 120 and 100, guys. And anything contracting within that range, you know how I like to play it. You guys know how I like to visualize these things. Anything contracting within this range, it's very healthy going forward. And this is one thing I can do for you guys and really help to visualize what I'm talking about here. You can do a extra bars here on stock charts, and I can give myself a little bit of breathing room to visualize, to show you guys what I'm picturing here. And I can really even do a better job. A little more washout wouldn't kill if we had like a small gap up tomorrow and then we wash down here. Something like that, and then maybe we come in the next day and we kind of put in a little something like that. And then we put in a little something like this. You see what I'm saying? And then we do this right here. Oh, shit. And then we put in another red day at the top. Another inside day. And then we do maybe one of these. Right here. Oh. Now we're infringing on like an A+ territory setup. That would be a beautiful, beautiful look right there in the market. If you want to know what an A+ setup looks like, keep something like this in mind in the future. Even if it does like this right here. Okay, just scenarios, but that's the type of look that we want to see on ASTS if this thing is going to continue and make a run similar to what OKLO did last year. You guys, a lot of you guys remember this one. OKLO was a powerhouse last year. We go back to the end of the summer. End of the summer into October. And ASTS blew off above 100. This is the best one I can compare this to. We broke through a $100 level, and we just pushed from 80 to 180 with that strong shape that was forming in the market. You know, very similar ascending triangle looking pattern. And we get a little bit of washout here. We start to shape our way up, and then boom, we break the highs and we continue up. So again, ASTS firmly on radar for that possibility. Incredible washout candle today. You don't want to see another candle quite to that scale to the downside. But anything between 115 and 90 is still healthy going forward, guys. Let's go. That's the watch list. Be prepared for the end of the week as far as red folder news goes. We've got some tomorrow before the market opens. 7:30 a.m. We've got GDP and we've got unemployment dropping. So that'll move the market pre-market. And then we've got core PCE index coming out 30 minutes after the market open. That's, again, another day to come in and see some volatile moves in the market. So I like to be hands off for the first 30 minutes or so, unless I really see something I've got some conviction in. But Friday, same way. We've got pre-market news. We've got 8:45 red folder news in the form of PMI dropping pre-market. So, guys, be ready to go. You know, it's been a great month so far. I don't have any intentions of giving up the capital that I've been able to gain. And I really plan to be patient, extra patient, wait for SPY and QQQ to really shape up here and get a little tighter. You know, and at the end of last week, I talked about it a couple times, how this range is constructive. It's contracted, it's tight price range. And we sort of got that expansion move out of the contraction. We sort of got that to the downside. Okay, so now what I do is I'm patient and I'm waiting for price to construct and set itself back up in a pattern that I'm used to. So I don't have that right now. I'm more hands off, keeping eyes on every single play that we talked about right here. And that's all I got for you guys. Safe trading out there. Happy Thursday, and I'll talk to you guys tomorrow.